This is Kenya News Update today. What if I told you that a single statement from the White House could send billions of dollars in global markets on a roller coaster? European stocks are climbing, but the real story is a ticking clock in the Oval Office. President Donald Trump has just given himself 10 days to decide on war with Iran, and the world's money is holding its breath. Coming up, you'll discover the hidden winners in this high-stakes gamble, the mining giant that lost billions on diamonds, and the one economic number that could change everything. Let's get into it. Meet the traders on the floor of the New York Stock Exchange. It's February 2026, and their screens are flashing green in Europe, but red in Asia. The Pan-European Stock 600 is up 0.1%. London's FTSE 100 and France's CAC 40 are up 0.3%, but Germany's DAX is flat. And here's the twist. This isn't just about earnings reports. This is about a geopolitical countdown that started yesterday. But here's what nobody's talking about: the massive corporate loss hidden behind the headlines. Mining giant Anglo American just reported a $3.7 billion net loss. Why? A $2.3 billion write-down on its legendary De Beers diamond unit. The diamond dream is cracking. CEO Duncan Wanblad says they're separating De Beers, but here's the part that will blow your mind. At the same time, their core earnings actually grew to $6.4 billion, driven by copper and iron ore. They saved $1.8 billion in costs. It's a tale of two commodities, one collapsing, one booming. And then, something shocking happened across the channel. New data from the UK shows a public sector surplus of £30.4 billion. That's double last year's figure. Public borrowing is down 11.5%. Retail sales jumped 1.8% in January, with sales volumes up 4.5% over the year. The British economy is showing surprising strength, but the pound still dipped slightly to 1.344 against the dollar. Government bond yields, known as gilts, edged higher. The 10-year gilt yield is at 4.376%. Now, back to the main event, the 10-day clock. President Trump's ultimatum to Iran is the shadow over every trade. U.S. futures are climbing as traders await the Federal Reserve's favorite inflation gauge, the Personal Consumption Expenditures Index, and the latest GDP report. Asia-Pacific markets fell overnight, and Wall Street's major indexes dropped, partly due to a slump in private credit stocks. The tension is palpable. Ward 8 see the smell of disinfectant, the beep of monitors. No, that's a different story, but the tension is just as real. 9 years, 18 witnesses, 0 evidence. That's not justice, that's torture. But today the tension is global, financial, and waiting on one man's decision. Some say a strong stance protects markets. Others say any military action could trigger a crash. The implications are massive. A conflict could spike oil prices, cripple supply chains, and reverse the fragile economic recovery hinted at in the UK data. But if tensions ease, will this market rally have real legs, or is it just a temporary relief bounce? The biggest unanswered question hangs in the air: what will President Trump do in the next 10 days? And how will your money be affected? We started with a market on edge, waiting for a decision that could mean war or peace. Do you think escalating tensions with Iran is a risk to global economic stability, or a necessary geopolitical move? Drop your take in the comments. Subscribe to Kenya News Update today for more breaking news that connects the global dots to your wallet.